Hello, this is Alex Kazmark for the FXEdge.com, and this is your free daily Forex video for Friday, January 15th, 2010. A quick reminder before I begin, the purpose of this free daily video is education and not an alert service. I'm not going to make any trade recommendations here, but what I am going to do is point out levels of support and resistance for the next 12 to 24 hours. Please keep in mind that trading with leverage is very risky, so please don't trade any real money until you've established a proven track record of success on a demo account. Trading conditions are always changing, so make sure to watch Monday's video to stay updated. Well, interesting day as the market made some new dollar lows against the pound and the commodity pairs, but failed to close lower against the other majors. Economic data overnight was worse than expected as U.S. retail sales data disappointed for the month of December, showing further signs that consumers are spending less. This may have also caused business inventories to increase more than expected, rising 0.4% versus 0.1% expected. Unemployment claims were also a touch higher. The European Central Bank kept interest rates unchanged at 1%, and Trichet made some headlines during the press conference saying Europe faces a bumpy road and a great level of uncertainty. Perhaps this kept the euro from gaining much ground. I think at this time investors are very cautious where they put their money. It's obvious that commodity-related currencies are getting the bulk of the action. This may continue throughout the year. Today's consumer price index out of the EU and the US, along with other data from the States, will guide the market. We expect further dollar weakness. Currently looking at the euro dollar on the daily, trading at 145.02. We're going to have our first level of support at 145, even though the market is only 2 pips away. Very insignificant, but we're going to keep that number here anyways because that's going to come into play over the next coming days. As you can see, that is right in the middle of the range. The real support area is going to come in at 144.50. A break lower may target 143.50, and a break below the 200-day moving average is going to target 142.67 and 142. If the dollar continues to lose ground, we expect it to run into resistance. We expect the euro to run into resistance at 145.80. Above that will be 147 and 148.50. Pound dollar has been able to make fresh highs, trading just over 163.20 at 163.30. Our first level of support will be at 163.20. Not a major level. More significant level is going to be at the second level at 162.50. and 162. A break below that may target 160.50 and 159.20. First level of resistance will be at 164.20. A break above that may target 166.80. Now there's quite a bit of room here, so we're sure to find resistance perhaps at 165.50, but we're going to keep these levels open and see where the market ends up stopping prior to reaching 166.80. We'd like to see it bounce off the 164.20 level and come back down. Next up is the dollar Swissy trading at 101.87. First level of support will be at 101.30, followed by 101. A break below that will target parity. First level of resistance will be at 102.80, followed by 103.50. 104.20 and 105. We are going to keep this 102 figure in here because this might come into play over the next few days, but at this time we're only 14 pips away from the market. It's going to be very tough for the market to really keep 102 as a nice level of resistance. It might come into play in the future, but at this time 102.80 is the real level of resistance here. Finally, let's take a look at the dollar yen trading at 91.27. Our first level of support will be at 90.80. A break below that will target 89.80. And then we'll be looking for 88.20 and 87.20. Market had made a new low, so we are looking for downside pressure against the dollar. First level of resistance will be at 92. A break above that may target 92.30. And a break above that may target 93.20. And once again above that will be 94.25. At this time we don't expect this market to reverse and head higher, but if it does, 95.20 is going to be our resistance level number 5, and we don't think the market is going to go much above that during the first 6 months of the year. If you'd like a more detailed analysis with potential trade opportunities, please join us in the members section. This has been Alex Kazmark for the FXEdge.com free daily Forex video for January 15th, 2010. Until Monday, have a great weekend and good luck trading.